Hey, what's up, my friend? So in this video, you'll learn how to trade the double top chart pattern. Specifically, you'll learn what is the biggest mistake that traders make, right, when they're trading double top, right? And I want you to avoid this trap, right? This is so common, right, that I've seen it happen many times, and please don't make this mistake. Number two, right, how to short the highs of double top with low risk. And then I'll discuss when is the best time to trade the breakdown, right, of this chart pattern and why you want to do so. And last but not least, right, I'll discuss a little known technique, right, that actually increase the odds of you when you're trading double top. Sounds good, right? Then let's begin. First and foremost, this is the biggest mistake, right, that I see traders make when they are trading double top. For example, right, you have a nice uptrend. Then the market forms a potential double top over here, right? Tested once, tested twice, and they look at this chart, right, and they say, oh, look at this. This is a double top, right? I better go short, right? Because the market is going to reverse towards the downside, right? Just because they see this two-pointed nipple and they think the market is going to reverse. Now, think about this logically, right? This trend duration, right? Chances are it could have been in motion for months or even years. What makes you think, right? Just because you see two-pointed nipples that form after 4 weeks, 5 weeks, you think the market is going to reverse towards the downside? Does it make sense, right? Something that has been in motion for months and even years would just reverse on a dime? In fact, don't take my word for it. Look at this quote, right, by Jesse Livermore. He said that Rome was not built in a day, and no real movement of importance ends in one day or in 1 week. It takes time for it to run its logical course. So what does it mean? It simply means that, a trend doesn't simply reverse on a dime. Right, sure, it happens from time to time, but more often than not, right, when a trend reverses, right, it takes time for it to play out itself. So the market will go into range for quite a long period of time to wash out the weak hands, right, and then slowly it shows signs of crack and then it reverses. Okay, so this is the first thing that I want to talk about, right, the big mistake, right? Don't just blindly trade double tops, right? Be aware of the duration that it takes to form. If it's formed, too quickly, chances are, right, the trend would just resume itself. Moving on, right, how to short the highs of double top. So there is a very simple trading technique or strategy that you can use, right, to short the highs of double top. So let's say, right, the market again is in an uptrend, comes down, then it retraces back towards this highs, right? You don't want to just simply place a sell limit order and think that the market will form a double top. No, you want to let the market show its hand to you, reveal its hand before you take a trade, right? Because if you think about this, if you were to just blindly short over here, where are you going to put your stop loss, right? Here in the middle of nowhere? Doesn't make sense. So why not let the market reveal its hand to you before you put on a trade? So how does this market reveal itself to you? Very simply, right? Wait for the market to come up higher and then get rejected and close lower. So this is a form of price rejection. Yes, you are trading against the trend, right? But at least now you have a point of reference to set your stop loss, right? And there's a possibility that with this market possibly retesting back this swing low over here, and with a little bit of meat for you to to capture. So here's an example, right, on the Aussie dollar. You can see that this is the potential double top over here, and you got this price rejection sticking out of this highs. So this becomes a point of reference. You can actually look to short this market, set your stops above this highs or maybe a buffer above it, and see if the market, right, can retest back this swing low over here. Of course, now that clearly you're trading against the trend, you want to be more aggressive with your trade management. So if the market shows signs of reversal, that the trend is about to continue itself, you want to bail out of the trade quickly. So this is the type of trade that is more of a hit and run. You want to see if the market can quickly come down lower. If it doesn't, you're out of the trade. That's it, right? And this is how you go about shorting at the highs of double top, right? You wait for the market to tilt its hand by forming a reversal candlestick pattern, like shooting star, engulfing pattern, etc. So moving on, right, the third thing that I want to talk about is when is the best time to short, the breakdown of double top. So let's, talk about how, most traders would do it, right? So they see a double top, okay, then it comes down, breaks this so-called neckline or support, and they go short, somewhere here. I mean, it's not wrong, right? But if you think about this, right, where are you going to put your stop loss, right? Chances are you would put it above this high, right? So it's going to be pretty darn wide, if you ask me, right, to have a large stop loss when you're trading double top. And also, quite often what you'll see is that if you see a strong momentum move coming into area of support, right, the market could just as well reverse quickly swiftly back towards the upside, and you pretty much realize that, hey, I got shot at the lows. Man, I feel like an idiot. So what's the solution to this, right? Well, it's very simple, right? You want to wait for a build up to form at support. So what is a build up, right? So a build up is simply this, right? The market forms a double top, let's say, then it comes down to the low of support, and give it some time, right, to consolidate near the lows of support. This is what I call a build up. It looks something like a coil, a very tight contraction, right? Volatility has shrank, right? So the range of the candles over here, right, would be smaller than usual. And when you see this pattern, right, this will now make sense. Why is that? Because you can use this as a point of reference to set your stop loss instead of setting above these highs. Now, if the market breaks down of this build up, you can just simply set your stop loss, right, above this minor swing high, maybe just a buffer above it somewhere here. Now your stop loss is pretty much this distance compared to the original one you see over here. Which is the one that you want to trade? Chances are, for me, I always go with this setup, right, with a build up, a tighter stop loss, right, and when volatility contracts, right, it tends to expand afterwards, right? So there's always, if you ask me, it's better to trade this particular technique instead of watching the market swing into support, right, having a larger stop loss, and then with a possibility that it could just swing back in the opposite direction, right? So usually when you have a build up, right, form over here, other traders who are long would have their stop loss below this low, and that increases the odds of the trade working out, because if the market trades lower, it triggers this cluster of stop loss, right, which induce further selling pressure. So this, if you ask me, is the best time to short the breakdown when you're trading double top. And last but not least, right, okay, so just to share with you a quick example here first, right? So you can see over here, right, this is the double top I mentioned. Okay, no worries if you miss this part over here to short the highs, because when the market came towards this area of support, right, notice that it formed a nice tight build up as I mentioned earlier. So this could be a point of reference, right, this highs to actually set your stop loss, right, somewhere here, instead of setting above this high, which is somewhere here. So notice your stop loss is much tighter. A build up would actually induce further selling pressure when it hits below the lows, as traders who are long, right, would get stopped out of their trade. Okay, so this is an example. And moving on, right, how to increase your odds, right, when you're trading double top. And this is a really, really simple technique. Okay, so that traditionally double top, if you read textbooks, courses, and stuff like that, they say that double top would happen in an uptrend, okay, to signal the end of the uptrend. But if you think about this, right, why must you only trade this particular pattern in an uptrend? Why can't you trade the double top in a downtrend? Won't that increase the odds of your trade further, because now you have the trend at the back of your trade? You're trading with the trend. You're trading with the path of least resistance. Wouldn't that improve the odds of your trade? So you can actually apply the same two techniques that I shared with you earlier with the trend, right? So for example, the trend is down, you get a double top, you could look to short the price rejection of these highs, right? As what I've mentioned earlier, you can look to short the price rejection of these highs, and this time around, you could even be more confident in your trade and hold it longer, because you're trading with the trend, and possibly this trend, if it resumes itself, right, you could actually capture a nice move towards the downside. And alternatively, I also mentioned that you can short the breakdown similarly in a downtrend. Let's say you have a double top, market forms a build up over here. You can actually look to short the breakdown of this area of support as well. So you can see that whatever I've just shared with you, you can further improve the odds, the probability of your trade when you're trading with the trend. Right? Some of you might argue, oh no, Rayner, double top only exists in an uptrend, blah blah blah. I would say, don't get too fixated on what is right or wrong. Really, when you're trading, when you're dealing with technical analysis, you have to think about the logic to what you're doing, and don't just blindly follow what books, courses, or gurus tell you. In fact, don't even take what I tell you in this video at face value. Go and test out the approach, the techniques to what I've just said. Go and verify, right, to see what I've said, whether it makes sense and whether it works or not. All right? So with that said, right, let's do a quick recap. First and foremost, don't blindly trade double tops, especially, right, when double tops, takes only a few days or few weeks to form, right, and the trend prior to it has been in motion for months or years, because chances are those type of double tops, right, would fail and the trend would just resume itself. Again, just look through all your past charts, right? Look through, strong trending markets and see how this type of double tops usually fail, right, when it's a form after a short period of time. Number 2, you can short at the highs, right, of double tops using reversal candlestick patterns, right? Shooting star, engulfing patterns, and stuff like that. Number 3, look to trade the break of support, right, when there is build-up form, right? Means, as I've shared earlier, right, when during your double top, you can identify the area of support, the swing low, wait for a build-up to form so you can have a tighter stop loss, right? And it also increases the odds of your trade, because traders will be long and they will just put their stop loss below the low of support. And if the market breaks down, you can be assured that this cluster of stop loss will get triggered, which will fuel further selling pressure. And last but not least, right, double top, you can trade it with the trend to, further increase the probability of your trade working out. Okay, now, so if you have, enjoyed this video so far, then I'm sure, you'll like what I have for you, because on my website, tradingwithrayner.com, right, the link over here, right, just scroll down a little bit, right, I have this book called The Ultimate Guide to Price Action Trading, right. I'll discuss further in depth, not just chart patterns, but, understanding market structure, support resistance, right? And how to better time your entries and exits, right? So if you have enjoyed this video, I'm sure this Ultimate Guide to Price Action Trading, right, is something that you will like even more. And it's absolutely free. Just go down to my website, tradingwithrayner.com, click this blue button, enter your email, and I'll send it to your inbox. Simple as it is, okay? So with that said, right, I have come to the end of this video. Any feedback, questions, just let me know below. And if you've enjoyed this video, please hit the like button, right, because it would mean the world to me. Okay, so I'll talk to you soon.